Welcome, ladies and gentlemen, to Commodity TV and the Precious Metal Summit in Zurich. And yeah, day 2 is nearing now the end. But last but not least, we have Frederick Bell, the CEO from Elemental Altus Royalties, here with us. Frederick, welcome.
Thank you very much for having me.
Yeah, thanks for taking the time. The name says it already, you are a royalty company. So I think I saw in your presentation, you had a very busy year this year. You took 22 royalties on. How did you do that?
I think we've done 8 separate transactions, and a few of those have had multiple deals in them. But it's, look, as a royalty company, we're trying to invest sometimes when the market isn't so good.
Mm-hmm. Makes sense.
And this year I think we've done more transactions this year than we have done in the last 2.5 years combined. Mm-hmm. So we've been really busy. I think we're expecting to continue to be really busy. Mm-hmm. And that's both generating some royalties within the portfolio and also buying and creating new ones. So all of that is ongoing.
Okay, super. In those 22, you had already also royalties which are producing already, because I thought you have 10 producing royalties in the portfolio. Yeah. Or it's just more for the future building.
That's we've done both. So we've done everything from producing royalties this year, development royalties, advanced exploration, and even early exploration. So we have looked across the whole spectrum. Historically, we've tried to keep a really core part, a majority of the portfolio on producing assets because it's cash flow. And I think our view is that in markets like this, particularly, cash is king, and having the ability to have positive cash flow that you can redeploy into the market is very helpful.
Yeah, when maybe dividends,
maybe dividends as well, when markets aren't as good.
Yeah. Okay. Super. Where would you say is your focus? Is it more on gold or copper, silver? Please elaborate a bit.
It's a good question, because one of our first royalties was actually mineral sands. But we are weighted 70%, 75% gold, 25% call it copper. So I think we like the weighting towards gold, and we'll keep that going forwards. But we do opportunistically look at other commodities. And one of the transactions we bought this year was a copper royalty as well.
Do you have any, let's say, geographical preferences? Because I saw this world map and I had the feeling, oh, there. Interesting. How do you manage that all?
Well, we do cover every time zone. Yeah. So the sun never sets on Elemental Altus Royalties, as they say. But it's I think the majority by jurisdiction is Australia, and then Chile. And we have assets in North America, South America, Africa, Australia. And I think we like the geographical spread. We have been looking recently at more assets in North America as well. But I think, look, it's probably most mining investors, it's a lot of the same jurisdictions that typical mining investors would like. Those are the same for royalties that we're looking at. And so we see a lot of opportunities in Australia, in Canada, in the US, in some South American and probably some West African countries.
Okay, super. If we look at your portfolio, so you have now 10 royalties which are cash flowing, meaning bringing you money. What would be, let's say, in the next 2 years, how many more would start to cash flow? Meaning, what is your growth profile, given the fact that you want to take more and more money in?
Yes. So look, organic growth going into next year, we haven't guided yet, but I think we're talking at high level somewhere between maybe 20 to 30% growth in revenue going into next year if we do nothing else. And I say that, and it's a really key phrase, if we do nothing else, because if I gave you our presentation when we started the company in 2017, we had one royalty paying us $400,000 a year. And today we have 10 producing assets paying us maybe midpoint of guidance, $17 million. And we have
17 or 70?
17. And we have sort of 88 royalties in the portfolio in total. So I think every year has been a pretty busy year for us over the last couple. And looking at us now, we have a bigger team than we've ever had. We have more financial capacity, a better shareholder base, institutional shareholder base, and more technical capacity. So it's why we're being very active, and we're seeing a lot of opportunities in this market. And I think this conference is good, not just to catch up with investors, but also sometimes actually mining companies, exploration development companies, and look at royalty opportunities for them too.
Yeah, absolutely. And I could imagine that you can probably negotiate the one or other good deal for your favor, right?
I think it's probably a win-win in this market. because if you look at the overall equities, they're down. And I think for a lot of companies, if they can continue to advance the projects, which is key because you've got a fixed holding cost if you're an operating company or development company. So if you can continue to advance the property through the down cycles, you know at some stage the market will come back, and the more advanced you are at that stage, the better it is. And if you can do that with minimal dilution or no dilution through a royalty, or if you can do it at the asset level, which you can also do with royalties, that's sometimes very helpful from in terms of managing your dilution for shareholders, as the market comes down. So I think it's there's probably in the second half of 2023 quite a few royalty deals that have been done and announced. Suspect that trend will continue going into 2024.
Okay, super. Would it make maybe sense, given the fact that with CO2 reduction, e-mobility, solar, that you maybe switch a little bit away from the gold, maybe more to, I call them energy metals?
Yeah, so we have done that actually with our copper, with some of the copper royalties we've done, and we will look opportunistically at other commodities and other assets. And if you think about the mining space as a whole, precious metals are actually a small part of it. So it makes sense for us to have other commodities in our mix. And I think part of it is the technical capacity and confidence that we have internally to analyze and evaluate these projects. And at the end of the day, the most important thing is that we don't make any mistakes in terms of our investments. And so for that, I think we've done a lot of work over the years on gold opportunities and gold assets. And so it's a relatively easy market for us. And a lot of our investors particularly like the exposure to gold and precious metals. Having said that, we're definitely looking at other commodities. And I think one of the things we really have to try and get across is the supply-demand dynamics. And if you're talking about energy metals, battery metals in particular, you're starting to get into the chemistry for batteries going forwards and where that will go, which maybe adds a level of complexity to it for us to consider. So we are looking at the whole suite of commodities, but continue to be weighted towards gold.
Okay, super. Would uranium be something you might be interested? Because the supply-demand deficit was never better, and I think it is for the next 10 years probably.
It's very interesting. I think I worked for one of my first companies in the mining industry was a uranium company in 2010, 2011, before Fukushima. And so I'm actually fairly familiar with the uranium market and companies, and it is a really interesting commodity. I think I often call it a Marmite commodity because you have investors and some you love it or you hate it, as the Marmite phrase goes. And so for us, we haven't put it into the portfolio yet. And it's actually one of the interesting trends maybe in the royalty space has been some commodity specific companies. And so you've started to see over time, and it'll be interesting to see how this evolves, but some companies focusing on, for example, uranium or lithium. And so they go, look, there is a subset of investors who like uranium and they want exposure to uranium, and we can offer them a pure play uranium royalty vehicle. And the same's happened in lithium. And so it'll be interesting to see, do they end up consolidating or do they end up becoming part of the general royalty space, or do they continue? And you have these individual commodity specific royalty companies. And so for us, again, we'll keep our eyes open. And it's a really interesting space, uranium, with what's been going on over the last year and where it's going to go from today.
Fantastic. Last question, what does the balance sheet look like? Meaning, do you have enough firepower for new royalties? What is cash in the bank? Do you have any debt facilities, or how does it work?
So we, in December 2022, we signed a credit facility with National Bank and CIBC. And we previously had credit facilities, but this was sort of upgrading to the senior banks. So we're the smallest royalty company to have credit facilities from the big banks, and it materially dropped our borrowing cost going forwards. And we put in place a credit facility for up to 50 million. We have drawn 30 million of that on acquisitions to date. We are cash flow positive. So every month we're generating more revenue, more cash. And we have, at the end of Q2, I think our accounts had 10.8 million in cash. This is all US dollars, and about $4 million in equities.
Okay.
So net debt, if you don't include the equities and the cash, maybe 15 million, and we're cash flow positive. So we do have the ability to deploy existing money and to draw down as we go.
Fantastic. Super. Perry, thank you very much. It was a great insight. Wish you well. Merry Christmas. And I would say keep it going and think about dividends. That's what the shareholders like.
Thank you.
Thank you. Yeah, ladies and gentlemen, that was Frederick Bell, the CEO of Elemental Altus Royalties. Yeah, you heard it. 88 royalties. The company is well cashed up and has also the firepower to do more. 10 producing royalties, and they made already $17 million here. And yeah, this is also growing probably next year by 20-30%. That's exactly what we want to see, growth in that business and good income, because the costs are very, very low and they do not have the mining risk. So check out the company. Thanks for watching us, and bye-bye from Switzerland.